Welcome to the Commercial Real Estate Show, your source for insightful analysis and enlightening discussions. I'm Michael Bull. Thanks for being with us today. Well, today we're going to talk about a big subject around the country, and that is the U.S. office market. We're going to look at property fundamentals and see what happened in 2014 and what to expect moving forward in 2015. We're also going to look at some office use strategies, and we're going to look at the investment market. Please welcome my first guest, Walter Page. He's Director of Research with the CoStar Portfolio Strategies Group. Walter, thanks for joining us here in Studio One today.
Thank you.
Well, we appreciate it. And like we said, hey, let's look at 2014. It seems like the office market has really improved, at least in most markets. What really happened in 2014?
You know, I think 2014 and 2015 are going to go down as probably some of the best years in this real estate cycle for the office market. The last quarter in particular was exceptional. We hit 33 million square feet of net absorption nationwide and 91 million square feet for the year. That's a 40% increase from a year earlier. So that is just exceptional. And we think that it can continue in 2015. In addition to that, we had 3.7% rent growth compared to 3.1% rent growth the year before. Completion activity was not that significant, about half of the net absorption, about 47 million square feet, up 9% from the year before. So vacancies fell by a very significant 11 to 11.3%, 70 basis point decline, the largest of this cycle. So clearly this was a very, very good year, and I think we're set for an excellent next year in 2015.
Well, that's fantastic news. And you said that a lot of that absorption was absorbing vacant space, so new construction levels still pretty low?
So new construction activity is up to 107 million square feet. So we've had over a 30% increase in new construction in process. So clearly the improved fundamentals are now driving some construction activity. The construction activity is focused to about a third of the markets. The markets that have had significant rental gains. So markets like San Francisco, we've had a 60% rental gain, has construction. San Jose, significant construction. But we're seeing this spreading to other markets across the country. But in contrast, there's markets like Atlanta, Florida, even Phoenix and parts of Southern California. We haven't seen significant construction yet.
So these construction levels that you're seeing right now, how do they compare to, say, pre-recession levels?
So the construction level today of 107 million square feet is very similar to the long-term average of 122 million square feet. All right, so it's pretty close to normal. Obviously not as high as what it was in past periods in this part of the market cycle, but I would consider it kind of normal.
Yeah, okay. And what about for the classes of properties? I know in our market here in Atlanta, the Class A properties seem to be doing really well, but C is really struggling. Around the country, what do you see for the recovery for the different classes of properties?
So tenants want nice space. Let's be frank. Nice space, the demand for nice space is double the demand for not so nice space. Now, we define nice space as 4 and 5 star space, similar to Class A. Net absorption of that was about 2% of stock, double the remaining portion of the marketplace. So that's the big trend within the classes that we see.
Okay. And so the occupancy levels, I guess, show that, right? They illustrate that the occupancy is a lot stronger in the A.
Well, not necessarily. The occupancy is, it depends. If you've had a lot of construction in that segment, you tend to build that nice space, then you have occupancy issues. However, what we're finding across the markets is that new space is leased up. Take Buckhead here in Atlanta or many other markets, that 19 or 2008 and beyond construction space has now leased up. So there's more of a leveling of the playing field in terms of vacancy rates across the classes than there has been in recent years.
Yeah. And it's nice to see employment gains strengthening, right? And so how is that impacting the office market? And is it impacting CBD differently than it's impacting suburban office?
So we've had consistent gains of over 200,000 new jobs per month. And it is clearly impacting the office market. In particular, if you want to talk about CBDs, the demand growth has been really strong in the markets that we call with significant CBD rent premiums and infrastructure. Those are the markets that have public transportation. So you take a Boston, a New York, a Washington, Chicago, or San Francisco, and you can see that tenants are actually moving from suburban markets to the CBDs, and they have very tight vacancy numbers and strong net absorption. In markets like Atlanta, Phoenix, Dallas, many of the southern markets where the CBDs do not have these huge rent premiums over the suburbs, it is more of a level playing field. In fact, suburban Houston did really well this past year, over 4.7 million square feet of net absorption, representing a pretty significant number for that market.
Well, that's interesting, and especially with oil prices, what they're doing. So, what do you expect? You said you expect the robust growth to continue, but I guess the fourth quarter was really strong. We have things like oil prices plummeting. What do you expect in markets like Houston and around the U.S. For growth next year?
Okay, so we might have borrowed a little bit from 2014 for 2015, but our view is that we probably are going to do very similar in 2015. The cut in energy prices by 50% is clearly going to have a negative impact upon Houston, Oklahoma City, and New Orleans. We do not necessarily see that impacting other markets that have some energy dependence, such as Dallas or Denver. And then for most other markets, it's a benefit of significant proportion because $2 gas is money in the pockets of consumers and businesses. So it should be good.
Yeah, and still, I guess I'm showing my age, but $2 a gallon still sounds high. I don't know if it can go much lower, but I wish it would. Well, what are some other factors, Walter, that are impacting this growth? I mean, that fourth quarter is pretty strong. Are companies really growing and investing and spending some of that capital that they've been hoarding? Does the economy everyone feel that good? Is that what's creating the jobs and the office growth?
So the office growth, the improvement, I think, is less headwinds for the office sector than they've had in the past. So while the job numbers are great, what's also important is we don't have that shadow supply. That's that vacant space within tenant spaces left over from the last recession. That's pretty much gone. So tenants have renewed, and they've probably had to expand. We're also seeing the shrinking footprint. That's the space per job, which had declined by 15% in the last 12 years. So that's like going from 250 square feet to 220 square feet per job. It appears to be slowing. So it was declining at a 2% clip. It's slowing to a 1% rate of decline. Our view is that you can only take the library out of the legal office once. And so I think that may be hitting here. And we see companies such as Yahoo saying you have to work at home now. So that may be driving it too.
Well, it's interesting. And, I think, too, it'll be interesting to see what happens in that regard to square footage per employee or per job as the job market strengthens, right? So, maybe you could put me on a bench with headsets and a bunch of folks when I was just glad to have my job, right? But when it comes to retention and recruiting, I don't know. I think some of these companies may come back. I know a lot of our friends in the industry have gone to open floor plans and things, and we've kind of gone the other way and said, look, let's do private offices on glass. Let's do private offices and see if that helps with retention, see if it helps with recruiting. It's been interesting to see what moves forward in 2015 and 16, and also I think some of the productivity, some of the health issues. I personally think some of that could backfire. But we're with Walter Page here with the CoStar Group. We're in Studio 1 in Atlanta, and we're going to take a quick break. When we get back, we're going to talk about the investment market, cap rates, see what happened in 2014, and what's going to happen in 2015. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is brought to you by Bull Realty Commercial Advisors, a great place to do business. Visit bullrealty.com. RealNex, a comprehensive and powerful suite of commercial real estate tools at an incredibly low price. Visit realnex.com. That's REALNEX. FIU, Florida International University. Earn your master's in real estate in as little as 10 months without interrupting your career. Visit FIUonline.com. Xceligent, the resource professionals use for commercial real estate information. Visit xceligent.com. That's XCELIGENT. Commercial Search, the source to market and source available properties for sale or lease. Visit commercialsearch.com. For more information on these great companies or for additional videos, podcasts, or articles, visit CREshow.com.